What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to be going over the DOW, the DXY. Also going to be taking a look at Bitcoin, obviously. We're going to take a look at some more details, so make sure you stick around for the whole video, and I'll show you why my whole theory since last year has not changed at all yet. So nothing has changed. We're also going to talk about gold, silver, oil, and we're going to look at some more bubble pop patterns. So definitely stick around for the whole video. I'm going to show you why I believe this was just a bear market rally, which was expected. Definitely stick around for the whole video. Let's get into it. But before we do, make sure you smash that thumbs up. Leave your comments down below. Let me know what you think. Also, subscribe to the channel if you haven't already, if you want daily updates, and share the video. All right, let's get into it. So the Dow, as you guys know, I said if we can get above this 34,350 range, and obviously this will get lower as time goes by, but as of right now, if we were to get above this 34,350, then we may, rally a little bit higher. But as of right now, anything below that, I still remain bearish. I still think this was just a bear market rally, just a dead cat bounce, and I'll explain why. But as of right now, let's keep an eye on this on the Dow. Dow's still looking like it's ready to roll over and come on down. And the DXY. The DXY, we've gotten a nice pump. It's getting a tiny little pullback. But looking at this on a daily, I talked about this yesterday. If you look here, we had 3 white soldiers, which is right there. 2 and then 3. I don't have time to go over it because this is going to be a longer video anyway, but go ahead and look up 3 white soldiers yourself. It is a trend reversal pattern, which it does look like we're having here. Now, of course, we're going to have resistance right here at the 55 EMA 104.08. If we get above that and hold support, our next resistance is 104.81. If we get above that and hold support, chances are this thing is going to fly. And that doesn't mean you're going to see one big, huge green candle, right? That's not how the DXY moves. You can see how it moves. You're going to have pullbacks along the way. If you look at this whole thing, this looks just like a pullback to the downside to correct a little bit from this rise before continuing back to the upside. Now, let's take a look at the monthly. As you can see, the monthly, we had slightly lower highs on this monthly close. We had higher highs in the RSI, right? That is hidden bearish divergence. And guys, I know a lot of people don't like to look at it, but this is still a huge downtrend, right? We have not had a macro reversal yet. Now, if we close the monthly above this 22.7, then there's a possibility, guys. But let's watch this monthly, and that 22.7 is also the 8 EMA right here. Close below that, and we're most likely headed back down to retest the bottom of this again, depending on how long that takes, right? Now, looking at the weekly. So as you guys know, the weekly, my weekly invalidation point is a weekly close above 24,362, which is our old high, right? If we can close a weekly above that and open and close the next, then possibly, this was the bottom and Bitcoin's going to $100,000. I highly doubt it, but we'll see what happens there. As of right now, everything is still showing bearish in the macro. If we go from this high, which is right here, to this high, you see you made a lower high in the price action, a higher high in the RSI, and then what did you get? A dump. Same thing over here. Now we have a higher high here, or a lower high here, and a higher high here. That is another same thing, hidden bearish divergence, right? The RSI is resetting for more downside. This big, huge rise in the RSI here was very small in the price action. Now, I know a lot of people are showing it in a 4-hour. It looks huge. But guys, don't lose sight of the macro, right? That's key here. Then you can see my yellow line from this high to this high. We made a lower high, and in the RSI, we made a higher high. Now, one more thing I want to show you guys on this chart. Let's look at the 4-day chart, right? Looking at the 4-day chart, look at this huge divergence from the high here all the way to down here. Major, obvious lower high, right? And then you get a higher high in the RSI. That's pretty big divergence there, guys. Be careful. If you guys are interested in trading, before we go any further, make sure you check out Prime XBT. I have a link down below. You can trade crypto, Forex, gold, silver, oil, S&P, Dow Jones, everything all from one exchange. They don't trade against you, and you don't get the scam wicks like you do in the scammy garbage exchanges. So check them out if you haven't. You can use my promo code Savvy50. That'll get you up to a $7,000 bonus. Savvy25 gets you 25% off your fees. And guys, if you're not using a VPN to protect yourself on the internet, I suggest doing that. I do have a link to Pure VPN down below with a huge discount, super cheap. Definitely check them out. And let's see what's going on. There's also down below is my socials, my Twitter, wow, I can't think this morning. Sorry, guys. Discord, all those links are down below. Check them out. They're below the video. And at the end of the video, I'll leave a tutorial on Prime XBT, also showing you that nothing has changed in the macro view of this bubble pop that I believe we are still in. Now, on the daily here, let's go to the daily before we get into the 4 hour, right? So on the daily here, here's our invalidation point, that 25.8. Same as it's been for a very long time. And I showed you guys the possible, there's two measured moves that get up to 31.5, which is possible. I'm going to show the bullish case because it is a possibility, although I don't think this is going to happen, but I'm going to show you what it is. Now, looking at this descending channel here that we broke out of, and so far we're holding support on the top of that trend line, but a break below that, guys, and it's over. So 31.5 is the measured move there. We can also look at this white dotted line and this bottom line here, looking at this as a falling wedge. And that breakout was down here, and that would get us the same range, 31.5. So that is still definitely a possibility, right? So you got to keep that in mind. But in my opinion, I think this is topped out, and we're probably going to continue down from here, right? So another thing we can look at, let me pull this up. Let's put a trend line on these tops right here, right? All the way down. Whoops. And if we zoom in here, we are below that, getting rejected on that trend line, right? Right now, we are getting rejected on it now. We do have much more room to the downside here. Let me get that off of there now. And we will go into the 4 hour. Don't forget, guys, we're going to go over gold, silver, oil, some other bubble pop patterns, and show you what a bear market rally looks like, or dead cat bounce. So now we can move this, right? Let's put it around right here. So break below the 22,640 and getting resistance there will confirm that this thing is continuing to the downside, right? Another thing I want to point out, people are going to point out hidden bullish divergence here because we're making lower highs. We've done that in all of these up here too, right? We also have major hidden or major bearish divergence, not hidden right here. We made higher highs, yet we made lower highs in the RSI, right? So it is looking very, very ugly for Bitcoin, in my opinion. Now, let's zoom in here a little bit. Here's our 4 hour chart. And I showed you guys this over and over and over and over and over again. Our first target's this 20,700 range. After that, we have 20,500 and then 19. As long as we break below this, right? We can move this over in the 4 hour now. Still looking bearish here, guys. Unless we can get back above these EMAs, which right now are around 23.1. If we can get back above there, hold support, then we may come back up for a retest of this at the 24.1, 24.2 range, depending on how long it would take. But other than that, I break below this 22.6 range, and it's pretty much lights out, right? Also, we can look at, I posted this yesterday on Twitter, the RSI. Now, as of right now, we got back above that a little bit, but it does look like we're going to close below this trend line right here, right? We got a wick above, just another trap, in my opinion. Probably going to close below and continue to the downside. Now, that doesn't mean it's one straight drop, although it could be. This stuff takes time. And if anyone that's spent any time in markets know that, you know, there are big moves sometimes in a quick period, but most of the time things draw out, get real lazy. Everybody loses, gets away from paying attention to it because it's boring, and then the big moves happen. So be careful, be cautious, and be aware. If you are trading, make sure you use stop losses and risk management, guys. Don't be trading 100x, trying to get in perfect spots. Now we're going to look at the indicator I showed you guys yesterday. Now, this indicator was made from a guy in our group based on my EMA strategy. I did make a video on that. You could check it out on my YouTube page in the tutorials. But that's using the EMAs 8, 13, 21, 55, and 200. Now, the most important there are the 8, the 13, the 21, and the 55. And as you can see, we got the short signal that I talked about yesterday. The 8, the 13, and the 21 crossed right here, crossed the 55, and the next candle opened and closed after the cross, right? Let me zoom in so you can see this. After the cross, the next candle opened and closed below the 8 EMA. And I told you, that doesn't mean it can't wick up, and that before continuing down, this just signals a good spot to short, right? Now let's look at the last couple, right? Let's find, right here was a long signal on the EMA strategy. And if you want to, this is totally free. It's go into your indicators and put in EMA candle close strategy, 8 close, 13 close, 21, 55, so on and so forth. You'll find it in there. Let me get that off there. So this one told you to long here. This is why I say don't go high leverage. Don't get all crazy. Good places, when these happen, it's a good place to start laddering in at least. But you can see it told you go long here, came down a little bit. So it signaled you to long at 16.8. It did get back down to 16.671, but you can see what happened after that, right? Now let's go into, and guys, there's no reason to charge for these indicators. And the reason being, no indicator is 100%. If there was one 100% accurate, it'd be worth a lot of money. The reality of this is all indicators fail sometimes, right? If you're buying an indicator, the person that made the indicator obviously isn't making a lot of money off it, or they wouldn't be charging you for it and trying to make money that way. Just something I want to put out there. So here was the last long. Let's look at the last short. This is on the 4 hour. It works even better on the daily if you have patience, right? So this right here told you to short right here. You got up a little bit higher before continuing down, but you can see shorted here, right? Now, let's take a look at the next spot it hit right here. Told you to long. That nailed it pretty damn good. We did come back a little bit more, but you can see what happened. So let's look at the short before that right here. Now, this is what I wanted to point out. See, told you to short on this candle. You did get a wake up. So it doesn't give you the exact, no indicator does. And then you had your continuation to the downside, right? It had you long here, short here. See, in the 4 hour, it can get a little choppy in the chop areas, right? But nevertheless, it's pretty damn accurate. As you can see right here, it told you to short. That was a huge move. This is about where I think we are now. Actually, around the 48K, we had the same type move. See, told you to short here, short here, short here. But you can see where it was choppy. You get a little longs and shorts. Now, let's take a look at the daily. This is why I say it more for swing trading. It's pretty damn accurate in the dailies, right? So it would have had you short up here at 52. It won't catch the exact up bottoms and tops, but it'll keep you safe, right? So it told you to long or short here. And what you can do with that is just trail with stop losses to be safe. That way, if you get stopped out, you can be in profit, right? But if you get out when it says long and short, told you to short here, told you to long here, so you would have made profit. But after this long, then it told you to short up here, right? So you would have made profit. And that short would have carried you all the way down to here. And it told you to long here, so you would have got out of your short. It did tell you enter another short after that. Just kind of showing you how this stuff works, guys. This is a very good indicator, to give you an idea and help you be on top of the market structures, right? So let's take a look at the weekly. So the weekly, as you guys know, I looked at this as a huge flagpole, this being the bear flag. This is one of the reasons of many I have a target down as low as 35 to 4,500 by the middle or end of this year. This chart, mind you, is well over a year old. It was made on December 2nd. We'll take another look at it here in a minute, but December 2nd, 2021, we were calling this all. We called all these bottoms, right? This one did not quite get to where I wanted to see it at that 14.9. Nevertheless, we did get our bounce there. Coming up, remember, this is the invalidation point, 25.8. Breaking above this, opening and closing a weekly above this. That would invalidate this whole idea here because we'd get back above the 55 EMA. But as of right now, it's playing out beautifully, guys. Absolutely beautifully, right? So what's this target here, 94? That is the measured move of this being the smaller flagpole, this being the bear flag, putting it down here. And anyone that's followed this channel for any amount of time know these targets get nailed more often than not, right? So this one's about 9,500, and there are many other things pointing to 9,500 in Bitcoin. So here is the .com compared to Bitcoin chart, right? Or the Amazon.com bubble. You can see we had pumps in here, and we talked about this way before it happened, that you get pumps, everyone would get bullish, only to make a lower low. You get another pump, everyone gets bullish, make a lower low. This is how bubble pop patterns work. And no, this is not an Elliott wave count. This is a bubble pattern. Maybe I should change these to just the, without the numbers on it, because people seem to think this is an Elliott wave count. This is not an Elliott wave count. This is a bubble pop pattern, right? There's always a false bottom. Could this have been the false bottom? It is possible. We talked about the false bottom being the break of this weekly trend line. We did break it. Although I really am sticking to the time frames here, as in the false bottom will be sometime in February or March, possibly April. I've said that since the beginning, the false bottom in February or March. Where are we? We are in the beginning of February still. Plenty of time to make a lower low for a false bottom. A lot of people don't pay attention. They just hear what they want. Make sure you smash the likes if you've been around and you get it. I'd like to see how many people actually get it, because not many seem to, right? So anyways, you had this rally here. You had plenty of rallies. You had a big rally up here. This was 100 or some. Let me see. What the hell was that? That one there was 80% rally, right? What do you think everyone did there? They got super bullish. They thought the bottom was in because it dropped so much, right? Was it? No. And then you did it again. And then you got another drop. And then you had another big rally, another rally, another rally. Just like we're having here, guys. I am not convinced the bottom is in at all. Now, here's another bubble pop pattern I've showed before. This is Nintendo. It's been, let's see, the top was November of 17. So that would be 17 years ago. We still have not broken that all-time high. And as you can see right here, this is what I want to point out. This is a bubble pop pattern. Look at this rally. Look at this rally, right? Even if it was to go down around the same percentage of this says about 7,600 if it was to, be more like this one, right? But this took years. So possible, yeah, but what is this? This is just a bear market rally, guys. Sony, this has been over 20 years and it never hit its all-time high. And Sony's a very successful company, right? And if you look, what did we have? We had a big bear market rally here. We had another one here. Still to make lower lows. And even this rally, we still made another lower low after that. Did that look huge and were people bullish back then? Hell yeah, I'm sure they're super bullish. But look at what we have here. Pretty much just the same stuff, guys. Be careful, man. Gold. This chart is about 2 years old, right? So we actually made this chart back here. So yeah, close to 2 years old. And we were looking for a B, and a C. And if this is the case and we hit this 1559 somewhere around September, October this year, when I think the bottom will be in for Bitcoin possibly also, then this would be super bullish right here. But if we break below this, your next stop is around 1400. We break that 1400, most likely headed down to the 1211 range, and this would be a much longer bear market. So for now, we're going to keep our eye on that 1559. Now, silver, same thing. And look at gold, guys. It's let me zoom in here so you can see it. It's lost support. You can see it broke out of the rising wedge here. It was also making hidden bearish divergence all the way up here, right? Same thing. Trend is down, hidden bearish divergence, continuation of the trend is down. Silver is pulling back now. As you guys know, my first target for silver is 15.6. I'm still looking for that. Maybe that happens September, October, and that'll be the bottom for it. But if not, we could go as low as $7. I've showed you guys that before. We've also broken out of a rising wedge in silver. Now, oil, this chart also super old. We made this chart back here. Actually, we made this when we broke back in September. And I had told you we'd probably come up and retest this trend line, which we did, and then come back down. My target here is still 62.54. If that breaks, we could see a capitulation back down to around this $26, $27 range. I know a lot of people don't think that's possible. Remember, guys, this went to -40. And with all the stuff going on in the market, there's probably going to be a whole lot more insolvencies, right? So just be cautious. And that's pretty much about it. We'll take a quick look at Tesla. And as you can see, lower highs in the price action, higher highs in the RSI, hidden bearish divergence. Hidden divergence is a continuation of the trend. What way is the trend? Down. Not looking too positive for there. Now, if it does have one more big rally, where could that go? Could go as high as to test this trend line again, which would also line up with the 55 EMA 227. If it was to reach there, I would short the hell out of it. So anyways, thanks for watching. Smash those likes, leave your comments down below. Also, share the video if you would, and subscribe if you want these daily updates every day. Take it easy, guys. I'm out.